Whoa.
It's your daily dose of how to manage your money. And now it's time for Phil's Gang on the Off the Wall Street Network.
Oh, God. Are you nuts?
With your host, Phil Grande.
Bye. Podcast. I get my mic here. All right, so we've been listening. It's just amazing what goes on. And as I said the other day, the dramatically, the lies, the how they take an issue and blow it up, so much worse since they entered into this podcast era, and you got everybody. I mean, everybody could be an expert. It doesn't cost anything to have a radio / podcast. So here's a great example. They've been scaring people with this for a long time. So they come out. Remember, everything's about getting clicks. The whole deal is about getting clicks. So here they come out. This must be the third time I've seen this BS story. So they're talking about how we are entering a debt stress phase, and almost no one's paying attention. This is one of those most important macro developments unfolding right now, and it's happening quietly and behind the headlines. The issue is no longer just the size of the U.S. government debt. The real danger is the timing, the refinancing cliff. More than 25% of all U.S. government debt will mature in the next 12 months. One of the largest refinancing waves of the century. Now, we saw something similar in 2020, but the environment was completely different. Rates were near zero, liquidity was abundant, money was essentially free. That world is gone. The rate reality, policy rates are now 3.75. That means over $10 trillion in maturing debt must be refinanced at a much higher interest. And it goes on and just keeps talking about it's going to be difficult, and the whole world can come undone. And where does the money come from? And it's just, so here's the truth about that. So when you hear this crap about this refinancing, let's clear this up. This is a very misleading story. It's a lie. It's all about clicks. Now, this idea that the U.S. is heading into a debt stress phase because 25% of the government debt is maturing in the next 12 months. It sounds dramatic. It gets clicks. That's the point of it, but it does not tell the truth. So here's some of the truth. Yes, there's a lot of debt and it's maturing. That's the truth. But it's not a crisis like they're claiming. It's not a crisis, okay? A big chunk of government debt matures every year. Every year it does. It's not new. It's not unusual. And it's not reflecting a cliff, reflecting a cliff. Now, most of that debt that they're talking about is T-bills. That's just short-term securities designed to roll over consistently. They mature, and the Treasury issues new ones. So these are the T-bills. These are short-term. And they mature, and it happens every week. The United States does not refinance debt like your household or my house or a debt. It doesn't have to go find money. You have to go around the bank, say, I go to this bank, that bank. Can I find money to refinance my house or my business? Government doesn't do that. We talked about this before. So it doesn't have to find money. It just issues new securities. That's all they do, is issue new securities. These ones are coming due, the 10 trillion or whatever it is, right? So they just turn around and issue new ones, like it never happened. It's like you have a say you had a note, $100,000 at the bank, it's got to be paid. You walk into the bank, hey, don't worry about it. We'll issue another $100,000 note. And we keep doing it over and over for the rest of your life. That's what this is. It's all BS. Because T-bills, these short-term T-bills, they're the safest asset on earth. Banks need them. Money market funds need them. Foreign governments need them. These T-bills, they're safe. So there is no problem, okay, with these T-bills. So the idea that the U.S. might not be able to refinance is total BS. It's just total bullcrap. I don't want to say the word, but it is. Because, again, they just rolled it over. They've been doing that for years. It's unbelievable. So the real issue, okay, and it's all about getting clicks. The real issue isn't maturity. That's one thing about radio. You don't have to worry about clicks. So the real issue isn't maturity. It's the cost. That's the issue. They'll roll it over. Now, the cost is the problem. Okay? It's not that the debt's maturing. We got a problem. We can't find a place to borrow money, which they're making it sound like, oh my God, where are we going to get the money? That's not the problem. So the problem is what interest rates is it going to get rolled over into? So if you remember during the pandemic, rates were near zero. Refinancing was cheap. They just rolled it over. So rates are around 3.75 right now. So when the old debt matures, you know, just think if you got a debt, you owe $100,000 to the bank, you go into the bank and you go, oh, don't worry about it, you don't have to pay it off. Here, just give me that. Here, I'll write, and they pull out the drawer, here, I'll write you a new one. It's the same thing. The only difference is higher rates. It's going to be higher interest costs for the government, bigger deficits, more treasury issuance, and long-term fiscal pressures. This is a cost problem. They're making it sound like it's a refinancing problem. It's not it's done automatically. Almost every day they do this. This is just to get clicks. And this is what I talked about the other day, about how when everybody went online to all these podcasts, anybody can have any show, and they're an expert. In radio, as I said before, you had to buy your airtime. You didn't want to be syndicated because you're on salary when you're syndicated. So if they give you a salary of $125,000, that's your limit. You can't make any more money. The house makes all the money. Who the hell wants to be syndicated? Now, the problem is you have to eat bread and onions. You have to starve for about 5-6 years before you make any money. Okay? But if you have that makeup and you're an entrepreneur and you want to do that, that's the best thing to do. Once you get caught into a salary, you're always working for a network. They tell you exactly what to do, what you can't say, and you're not making real money. So that's why now that all these people who couldn't enter radio, because there was an entry level problem, because you had to come up with either 20 to 50, depends on what market you're in, 20 to 50,000 a month you had to pay for airtime. Very few people could do that. When you start out, like I say, you start out small and you really have to starve to death until you build your subscriptions up. So getting back to this, everything's about clicks today. It's not about truth. So yes, we got a big debt problem. Yes, it's going to be higher interest rates. All the problem is we're going from 0 to 3.75 to 5%, depending on the deal. That's the only problem. Here they're talking about, oh my God, where does the money come from to refinance this mountain of debt, this cliff? Where does it come from? Where it's always been coming from, T-bills. This is amazing. The Treasury must issue massive amounts of new bonds. They do it every day. It's done every day. And that has unavoidable consequence. Liquidity gets pulled out of the financial system. It's just garbage. So that's what's going on with that. So don't even worry about it. It's going to get rolled over. It's just that what the problem is, it's going to be just at a higher rate. Okay, and there's consequences to all of us because it's going to be at higher rates. We know that. So that's this. So again, everything's exaggerated. Money market funds, they want T-bills. See, the government also, don't forget, during the day, okay, does the same thing. They have to pay it's about 16, I think it's 16,000, I think it's 16,000 a second, some crazy number like that it costs to run our government. And they do the same thing. It's all done with T-bills. That's how they finance it. And so the government, let's say it's 16,000 a second. I'm not sure if that's correct, but let's say 16,000. That's how they finance it, with these T-bills. Trump's financing everything with T-bills right now. So that's how it works. But let's get to what's going on in the real world, okay, instead of the make-believe world of the podcast. Let's do this here. So what's going on right now is this, that last week we had, the market was really weak. Intel got really crushed. And so, again, you got to stay with the strongest stocks right now. And since January 20th, remember, we've had a pullback of 10 basis points. But that's not a lot. That's not enough to change the Fed's expectations or risk sentiment. Not going to change any of that. The world's not going to collapse. 10 basis points, okay, and why the 10 basis points? It's not a lot, but it's enough to, people are going to pay attention to it. But nothing serious is going to happen to you. But what's the important part about the 10 basis points increase since January is that it has driven, the reason why this is happening, 10 points, is being driven by mixed economic signals. It's being driven by Trump always changes his mind about these tariffs. He uses the tariffs as a weapon. He uses the hedge, which is fine and which is great, and it's the right thing to do. But on the other side of the scale, the problem is when he does this, people run to safety, and people are worried. So what's happening is the market was weak last week. Everybody ran to gold and silver. That's why gold and silver is going through the roof. And but everybody's saying today, oh, well, the reason why we're down 10 points since January, beginning of January, is because we're expecting a rate cut. That's a lie. That's not true. No one's expecting a rate cut. The whole thing was a safety trade. Okay, it was rotation into gold and GDX and POS and copper. That's what's happened, okay? And these stocks are going to continue to shine. Now, last week, remember, we finished the week. Intel got crushed. That weighed on the NASDAQ last week. And we also, remember, we still have these cleanest, dirty shirts in the laundry, Microsoft, Meta, and NVIDIA. And all that happened is they're holding up. They're not getting worse. They dropped, let's say, 40%, but they went up to say 2%. Oh, look at that. They're doing well, they'll say. No. No, they're not. Microsoft, Meta, NVIDIA, no, they're just holding up. So just pretend they went down 30%, went up 1% on Friday, and the jibber jabbers will come out and say, oh, look at that. Boy, they're doing good. Microsoft, Meta is really doing good. What a bunch of crap that is. So, and there's no buying opportunity. You go look at those stocks, there's no buying opportunity. And so again, you can here. I'll go to my chart. I think I have enough time, don't I? So let's go. Okay, let's go to my chart. I want to show you what I mean. Okay, so so let's look at here, for example, Apple. Now okay, let me get my microphone here. So let's look at Apple. See how Apple been collapsing here? And see the downtrend? That's your power right there. And see how it snapped back? Well, that's because it snapped back because of two reasons. People who short it are taking their profits. That snaps it back because they have to buy it. But there's no buying opportunity here. Because why? The trend is wrong. Look at the trend. It's going straight down, straight down. So when you hear, oh boy, Apple is turning around, it's really doing good. No, it's not. That's a bunch of BS. It's BS. So always follow the money, not the noise. And thank you for listening. Phil'sGang.com.